welcome to Tradespoon in Yellow Tunnel. My name is Vlad. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. This is my brief bio. Please say hi on Discord channel or on YouTube, not YouTube, on GoToWebinar. Type in yes if this is your first event. Disclosures are very important. Again, if you're new or this is the first time you see the slide, please visit the link on your screen, optionscreening.com, so you can understand the risk and suitability associated with trading stock or options. And you can always pause the screen to read the remaining of the disclosure. Basically, it says that I'm not an advisor, and I'm here to show you what I do in my own account, trading account for educational purposes only. All right, trading psychology is important, right? Uncertainty persists. We have escalation in Middle East. Oil prices are going higher. Still uncertainty about tariffs, agreement with Canada or European Union, debt ceiling, right? Beautiful bill. A lot of uncertainty in the market could cause instability. We're in summer. The weather is nice. Everybody's on the beach. Nobody wants to trade. So liquidity is slow. I can see it by the attendance today, very slow attendance. So only a few of us are here trading. Most of us are on the beach, right, enjoying the summer. So any surprise, right, any new information, and you can kind of create this balance, break the equilibrium between bulls and bears, to the upside or to the downside. So it's important to always concentrate on things that you do have control over. What do we have control over? Oh, Mark, welcome back. We have control over number of positions, risk management, right? But number of position size, and cash. And we need this to avoid flight or flight response. So cash, I propose to have 30% of portfolio in cash. I think market still has a little room to the upside. I think it's going to continue slowly grinding to the upside, but I think there's a lot more risk to the downside. So I personally, have more cash in my 401 account, raised more than usual, and you can see in the Tradespoon Yellow Tunnel accounts, I try to minimize the number of positions I have and kind of not hold them for a long period of time, but try to hold them for a couple of days, couple of weeks, and move on to the next trade. Not get caught in the pullback, right? Portfolio drawdown. What does that mean? Number of positions 4, not risking more than 2.5%, especially if you're new to trading. I would start with 4 positions, 2.5% account value per position. Those are the main rules. I would write them down. I would put them on the wall in my office, and then in my journal, I would manually write it down. The good old days, with a pen and paper, write it down. Before I get into a trade, what are the rules that I do not want to break? And these are the rules I propose not to break. I mean, some other rules you can break, but when it comes to risk management, if you can get the position size correctly, I think that's the name of the game in trading, right? It's all about position size. And when the market moves against you, can you predict what you will do, right? If you can get into a habit of that emotional intelligence and predicting what you will do, not what the market will do, then things will fall in place. If you get caught off guard, right, like Tyson was saying, if they punch you in the face and your trading plan, you forget about your trading plan, that's not good, right? We don't want to get punched in the face. And how do you get punched in the face? If you have either too many positions or position size is incorrect, and you have new information in the market, and you have a sudden pullback right against you, and you panic, right? And you panic usually when, at least I panic when I see that any of my positions are down more than 2.5%. How do I avoid that? Okay, so on Tradespoon, if you look at the stock forecast toolbox, I did not check today. Support 602, overhead resistance is 607. Neutral, right? Turning neutral. We've been dancing around the 600 level for a very long time. You might want to ask why 600? What's so magic about 600? Why is it being a glue, right, where we trade in. Not a lot of momentum to the downside. Actually doesn't see 597 and 610 overhead resistance, mainly because of this, right, SPX. All right. So if you look at the gamma exposure, we added, actually, for those of you who's interested, we added this to the production side. Bar chart added. We have marketing relationship with bar chart. So they added this information. So the 600 put wall, 600 call wall, right? So if you put this put wall and the call wall right at that 600 level, right where there's a lot of gamma, all right? And that's out, extremely large. This is back to the April pullback, right? A lot of people were fighting for this level, so there's still left over. It expires on Friday, right? So tomorrow we have VIX expiration. Thursday we have Juneteenth, so markets are closed. And then Friday we have equity expiration. So all of this gamma will expire, right? We're talking about 160, 170 billion dollars worth of gamma will expire. So very large position, it'll be gone. July slowly building 21 billion, but still very different, right? So the idea is, for now, you have that flip point, 5895, right? Switches positive to the gamma flip point based on aggregate gamma. And then the idea is that it allows, creates support for the market on the downside and allows the market to move gradually upwards. So as long as we're above that 5,900, both stock forecast toolbox are telling you that, slightly higher, 597. It basically tells you that market is supported, right? I actually looked at the spiders. $596 for 590, spiders actually almost matches to the penny with stock forecast. Right? Completely different models. That's why I like to use, okay, this is neural network, AI. This is, supply and demand for option contracts, right? Implied volatility. And they both point to the same picture. All right, so silver's trying to break out again, and spiders is glued to 600 level. It obviously works as long as there is no big news. And even news like escalation in Middle East, original reaction was 594, but it still was able to, go higher. Right, and SPX is right at that 6,000 level. So this equilibrium probably will be broken, right? Retail data today doesn't look like it's breaking the equilibrium, not much reaction. We do have FOMC decision tomorrow, right? FOMC usually creates volatility in the market. So we'll see if that's going to create the volatility in the market again. But for now, 10-year yield is stable. Dollar is precarious position, right? It's sitting low, descending triangle, very bearish pattern. Not much support below that level. It could drop to 90. For now, market kind of dismisses the, weak dollar. It's good for the economy, for US, right? Weaker dollar, you can export more things. But, it's also as a proxy of new administration, their policies, inflation and trade away from the United States. So that trade is still kind of intact. VIX is at 20, value stock slightly down, QQQ slightly down, spiders 40 basis points down, small caps down 0.5%. So, and silver is trying to break out again. Questions? Bitcoin pullback. So I think next couple of weeks, we'll see if there is going to be breakout to the downside or to the upside. From seasonality point of view, in the past few years, this is the time to break to the upside. It's a marginal break. I don't think we're going to make, we might make some new highs, right? We might get to 6,200, I don't know, 6,300, but I don't think it's going to get much higher than that. I think the risk is to the downside, that if there isn't any negative news, then it could drop lower. Any questions? Miss sense. So paid alert. Let's see. Yes. So June 17th, June 17th. Let's watch the scalar. So the scalar pulled back. Let's see, what's the alert? So I'm gonna initiate this position. Trade option. Scalar. July 310. Weekly July 310. Open. Let's see. Let's look. Switch to 5 minutes. Okay, so looks like it's stable. I'm trying to find stability. All right. What else is, so that's that. Let's see. So 10-year after retail data kind of not going anywhere. Let's see. Retail sales. And I guess weaker than expected. But, you know, for now, market is not reacting. Semi is turning positive, spiders flat. Yeah, semiconductor has been strong if you're looking for signals. Yeah, SMH, NVIDIA, EMR, industrials, energy. So looks like energy continues to grind higher. We allow, this was a pick for today. That goes higher. Let's see. Yesterday I entered MPC. MPC is also following suit. So MPC is heading in the right direction. Wait, did I get filled? Oh yeah, I just got filled. Okay. I didn't even know that. All right, so MPC was the trade from yesterday, right? So still kind of uncertainty in Middle East, even though Iran indicated that they want to get back to the negotiation table, but still the war continues, right? The bombing continues. So half of the position I was able to close quick. This was a trade from yesterday, right? This is a trade from yesterday, 166, quick, 2% move in MPC. So closed half of the position, and the remaining half is still open at 173. And looks like both MPC, is trying to break out, right? I don't know if there's any overhead resistance. Maybe 170. I think we said 170, then 175. And if I look at my new toy, MPC is, so it's supported well, gamma flip 150. So as long as it's 150, it continues to go higher. If you look at July expiration, just July alone, I mean, one standard deviation move is about 6%, so 175, right? So that's that 175 gamma. So 170, 175. So you already have a lot of calls selling in the 170, right? And then 175. So 170 got rejected, right? The initial reaction was rejected. If it's able to break, then 175. But again, with expiration, contracts will be rebalanced. How's crude oil doing? Crude oil kind of vertical move up, it pulled back, but I think there's still more room to the upside. So MPC, Valero Energy, looks like good ideas. Industrials, EMR is a new signal. I'm kind of managing GE. It's not breaking down, but it's not rebounding, right? With the fear of inflation, I think they announced that they're passing the cost to their clients. And you do have this period of digestion of this news. Not my favorite setup, but I have July contracts, so I'm still waiting. So GE, I'm still waiting. It started at 50% pullback on the position, which usually I try to exit. So if this level doesn't hold, then I would exit. What else? I mean, the fact that it's up and SPX is down, I guess that's a good news. NVIDIA is a stock position. Tried to get out of yesterday, came within, literally 2 cents on half of the position, didn't exit, but I have an order to exit half of the NVIDIA position. So half of the NVIDIA position, I'm trying to get out at 146.10. Oh, this all of it, right? Because I exit half at 144.78, and yesterday got close to 146.10. So I have an order to close 146.10. I mean, SMH looks good. A lot of buzz on AMD after earnings, kind of continues to grind higher, right? So AMD is breaking out. So, okay. So not all semiconductor, KLAC, I don't know why model likes this KLAC stock, but it does. Yeah, that's another signal. Not a lot of volume, unfortunately, right? So that's the problem, especially when you trade options, but some of these semiconductors are just, so some semiconductors, industrials, now energy, those are the sectors to keep an eye. Again, I think this is a momentum trading market, right? You have to find the stock, pick the momentum, and follow the momentum. I think high beta might not work, value might not work. You need to kind of follow the momentum, not the reversion to the mean. So if you see these stocks that are going vertically higher, you want to buy them on a pullback. Kind of, that's the strategy. All right, silver, let's go. I do have a silver position. On the happy thoughts. So dollar, so it's close, right? So I'm getting close to exit of the half of the position on silver. Bought at 98 cents. It's trading about dollar, exactly dollar. Okay, so kind of flat right now. I'm looking for a 30 cents move and then a dollar move on silver. But it needs to break out, right? It tried, right? It broke out from here, 32, and now 33, 34. So silver continues to grind higher. And let's see what else. What are some other positions? Well, let me look at the last 7 days. Okay, so yesterday, okay, so I entered MPC yesterday, Zscaler as a new position. Let's see, Microsoft. So Microsoft, I entered Microsoft yesterday, right? So I closed the July contract. This was the trade from last week. I rolled into August, right? I don't want to have too many positions in July. I think right now in July I only have JP Morgan and GE. JP Morgan, I got close to exit. I have an order to exit at $4 to 55 to 60. At this point, JP Morgan is in the money, right? 250, right? So it's in the money, and it's a July contract, so it's a matter of time. And as long as equilibrium between bulls and bears is not broken, you know, it got very close. GE is another July position. I mean, strong momentum to the upside, pull back consolidation, right? Wave 1, 2, 3, 4. In theory, there's a wave 5, right? Well, that's my, you know, thesis, right? But we do need continue. Market needs to escape this 6,000 level. For now, it's not able to do that. Rosser, happy Father's Day. Well, Mark, happy Father's Day. Thank you for being here. Everybody, happy Father's Day. If I didn't get a chance, you should have got an email with happy Father's Day. But if you didn't, happy Father's Day to everybody, to all the fathers and who have fathers and who have fathers in their lives. Great holiday. I did have a great time. Kids got me one of those grills with the stone. Outdoor grill with the stone. How's it look? Nope. Portable. Something like that, yeah. So tabletop, and then there's like a piece of stone. Oh, I don't see it. Something like that. I don't see anyone with stones. Yeah, it's just a stone, so something like that. So that was nice. Okay. So that's Microsoft. So I'm in Microsoft for 84.90. Microsoft. I mean, it's strong momentum to the upside. Right. So it did break through all-time high, and for 3 weeks it's staying above this breakout level. So that's the good news for Microsoft. So Microsoft is still doing well. So I rolled it into August position. And JP Morgan trying to get out at 390. Wanted to get out yesterday, didn't get filled, but trying to get out 390. And then we talked about NVIDIA 146.10, get out of the position at 146.10. What else do I have? FCX. And down was the market today. Consolidation, right? 3 weeks in a row, it's not going anywhere. It's sensitive to interest rates, right? Copper prices, sensitive to economy. Tomorrow's next event is the Fed, right? Expectation that 2 interest rate cuts this year, 2 interest rate cuts next year, no interest rate cuts this summer. First one maybe September, October. But again, all of that changes as you get, retail data, unemployment data, macroeconomic conditions, dual mandate. They have to follow. So we'll see. Oh, sorry, I missed all the questions. Daisy wanted to say hello. All right, Robert. Hello, Dolly Play. Nice, Robert. How's Honeywell looking? I mean, I exited Honeywell, right? This was the paid signal. I mean, it looks like GE, right? It pulled back. I mean, it did break through this level. It was a signal in the model likes it. I mean, I liked it too. But for now, it's not cooperating. I mean, I think financials and industrials are definitely momentum, definitely going higher. And if SPX escapes the 6,000 level to the upside, industrials and financials will lead and follow, right? Because that's where the momentum is. Obviously, after such a strong rally from, April lows, it needs a consolidation period, which is healthy, right? But when you trade options, you have to be right, but not only on direction but also on timing. And timing is, I still think that if you follow the 2024, right? I think we, September. I mean, we had a pullback in July, right? It reaches the peak right when the earnings season starts, end of July. And then starts pulling back end of July last year. 23, it was, end of July. So 23, 24, that's where it reached the top. Even in 22 during recession, I think there was a bounce, right? From June to August, there was a bounce. And then 18, right? When we had the first Trump administration, similar pattern, right? May, June kind of pulled back, but then July, you had a small pullback in June, but then in July, this is when it made new highs, actually, relatively new highs. So obviously you don't want to trade it just on seasonality alone, but you should at least consider seasonality. So I'm at least considering seasonality. So it looks like it's the same game plan, right? So unless you have some geopolitical risk, like Iran all of a sudden shuts down, Red Sea, right? What is that Strait? Hormuz? Bab al-Mandab. Okay, I didn't know that. But it's Hormuz, right? Hormuz. It's the word. I mean, this guy. And this guy. No, Suez Canal. Suez Canal is here. And then anybody's helping me? No. Okay, but okay. Iran is controlling Suez Canal and this strait and Strait of Hormuz. Why can I map off? It's a Persian Gulf, not Red Sea. Hello. Okay. That's why I couldn't find it. Okay. Sorry, not Red Sea. Iran is far from Red Sea, but Iran does control this Persian Gulf, right? Saudi Arabia, yeah. Wrong sea. Persian Gulf. The Strait Hormuz is here. Okay. Little geography lesson, never hurts. Okay, but that would control, because there's a lot of oil export from Iraq and Iran, Saudi Arabia, UAE. Okay. Wrong Gulf. Okay. Israel and Red Sea is here. So that canal, right? So geopolitical risk, right? That could change the balance. Try to trade when simple moves from predetermined buy or sell price. Thank you, Daddy. Now we're cooking. Now we're cooking with gas. Why wait till end of day? I mean, when you have large movements, right? Like, like Friday was a perfect example, right? I mean, you don't have to wait till end of day when there are no news. But when you do have news, right? Like Friday, when when the market did pull back significantly, right? Right. I mean, you want to wait till end of day because that will determine, the usually direction, right? We closed the Friday actually same level, so something happened and there's uncertainty in the market. But sometimes, if we almost closed the gap on Friday as well, right? Only because of the escalation that it, dropped. So when you get these news, right, or tomorrow FOMC meeting, if there's a new surprise, you want to wait till end of day for the bulls and bears to digest the data. Plus, the last 15 minutes is usually where the majority of the volume is, right? If you look at the spiders, majority of the volume comes in the beginning of the session and at the end of the session, right? These peaks of volume is, when the market closes and when the market opens. So that's why usually you want to wait till end of day. Thank you, Robert. Thank you, Desi. Let's see, what else do we have? All right, Cherry Blossom is back. Welcome back. Any other questions? So FCX, what do we say? FCX, it's rebounding, going long, higher. I mean, I have bullish position. Let's see, what is the support and resistance for FCX? Let's see where the gamma is. So the gamma is pretty far away, 38. Let's see, delta. 39, 38, 39, okay. Huge position at 40, huge position at 40, 40, 45. So I think FCX is well supported at 40, right, based on the gamma and delta exposure and just traditional technical analysis. So as long as we're at 40, I think FCX is in good shape. So that's FCX position. Stock position, I have time. GE, I have to be right by July 18th, which is 1 month left. Same thing with JP Morgan. But JP Morgan tried to break out yesterday. So you can tell that it wants to, right? It's ascending triangle. You know, it wants to get up, it wants to break through that level. But for now, it's trading in Fred's favorite ascending triangle, right? Or rectangle. This is rectangle, this is ascending triangle. So, but it tried to break out. It's trying again today. It's actually, but you can see it's outperforming the market. Right? SPX is down 30 basis points. Okay, so still waiting for JP Morgan to break out. We talked about MPC, talked about Microsoft, talked about the scalers, silver. Okay, and NVIDIA. NVIDIA is also trying to escape. It tried to do it yesterday, same thing. So these momentum stocks trade very similar, right? And momentum doesn't have to be high beta, right? Like JP Morgan, GE usually not a high beta stocks, but they are momentum stocks. All right, any questions? What else is interesting? Let's look at sectors. Retail, weak. Energy, strong. Metals and miners, strong. Okay, so energy, metals, miners doing well. Discretionary consolidating, healthcare pulling back, utilities pulling back. Consumer staples pulling back. So trading away from safety asset classes, right? Getting a little bit more bullish and aggressive. XLK trying to make all-time highs again. Breakout. So XLK is one of the stronger sector. Those Visa is recovering and stable. All right, industrials also strong. Banks pull back, consolidating. Energy is up. Home builders are one of the weaker sector. Equal weighted S&P consolidating. REITs consolidating. QQQ. Spiders slightly lower. Airlines continue to perform poorly due to oil prices. Transportation, same boat. India pulled back. Japan pulled back. So these vertical moves outside of the United States, they're taking a break. Germany pulled back. So you do have pullbacks. If you think that dollar trade will continue and trade away from United States, then maybe this is the time to add to your foreign exposure. Silver trying to break out. Gold higher and flat, I would say. Netflix consolidating. Meta continues to go higher, one of the stronger. Magnificent Seven stocks. Microsoft doing well. Google doing catch-up trade. Apple doing catch-up trade. They're weak. Google, Apple weak. Amazon also weaker, doing a catch-up trade. Tesla pulling back slightly. We're not getting a break with 300 F5 Fred. Close but no cigar. Okay, so GE, Vlad. Oh, look at MPC. MPC is going in the right direction. Okay. Model is doing a good job finding MPC. This scalar. Let's see, 15 minutes. Okay, so this scalar rebounded. That's good. Yeah, and then MPC is trying to break through 170. So you know there's overhead at 170. It's trying it again, trying to break out. We'll see if it's able to. If there's enough momentum to break through this wall. To break through the wall. MPC call wall 170. Okay. So that's the highest concentration at the right here. This guy. Yeah. So there's call open interest volume. Okay. We're gonna watch 170. Questions? CINQ. Stable. Oracle bouncing back. PDF Vlad, GE, Tesla. And SPX is glued to 6,000. Okay. Any questions? What do we have on earnings? What do we have on earnings? So JBL had earnings. Ooh, up 10%. So JBL producing good speakers. Up 11%, nice move in the JBL. Lazy Boy, and then Wednesday, what do we have? Friday is the KR. Okay, and Accenture. Yeah, so no earnings. You have KR and Accenture on Friday. KR is actually weak. Accenture also weak. Oh, we'll see. We have, I guess everybody's waiting for the Fed tomorrow. So Accenture weak, Kroger weak. Yeah. Any questions? All right, if there are no other questions, we do have Yellow Tunnel. There is a webinar at 12 p.m. So if you guys have time, please join me. Attendance is pretty low now. Now that we're in the middle of June, but instead of beach, if you want to listen to me, then 12 p.m. on Yellow Tunnel. That's all I have for today. Thank you very much and have a great day. Appreciate you guys being here. Thank you. Desi, Fred, Kevin, Larissa, Louis, Peter, Steven, Ted, Thomas, Bill. Thank you guys.